For those of us that may not know what R3Lab is the launch of the Risk, Resilience, and Regulatory Lab. That is the meaning of the R3. In our midst this morning, we have distinguished personalities who have joined us in this program from all across Africa and beyond. We are here being hosted by the FSD Africa, the UKID, and the National Insurance Commission. Can we please put our hands together for them? We have the representative of the Deputy High Commissioner of the UK High Commission in Nigeria, in the person of Bola Karimu. Also in our midst is the CEO, FSD Africa, Mr. Mark Napier. Sitting beside him is the Commissioner for Insurance, Mr. O.S. Thomas. Also in our midst is the Chairman, the Nigeria Insurance Association, Mr. Ganiu Musa. And also the Director General, the Chartered Insurance Institute of Nigeria, Mrs. Abimbola Teamiu. Also from FSD Africa, we have Mr. Elias Omondi. And also we have from the Insurance Regulatory Authority Kenya, Anete Kitu, who is with us here, alongside Moses Kipton. Thank you very much. The recognition is not in any particular order. We will be recognizing other dignitaries as they join us in this program. So to start with, I would like to invite Mr. Adamu Balenti, the Director, Research, Statistics and Publication, National Insurance Commission, for welcome and an introductory remark. Sir, you're welcome. As I said, sorry, in no any particular order, the CIMA President or Secretary General is here. Bless Abel Ezo Ngolo. Thank you very much. Mr. Balenti, if you're ready.
Podium. Good morning, everyone. The representative of the British High Commissioner, the CEO of FSD Africa, the Commissioner of Insurance of the Federal Republic of Nigeria, and the Chairman of NIA, DG Nigerian Insurance Institute, other distinguished ladies and gentlemen, you are welcome. We are here today to officially launch the R3Lab project, the Risk, Resilient, and Regulatory Lab project. The R3Lab project is a platform developed by FSD Africa to assist insurance regulators and supervisors in Africa to work together to strengthen their organizations and develop solutions necessary to create an enabling regulatory environment. The launch of the R3Lab is the third of many projects that have been consummated sequel to the technical partnership between the National Insurance Commission and the FSD Africa. The partnership is part of our commitment to encourage innovation and promote insurance market development. Some of the projects which are ongoing include the Market Development Framework, Risk-Based Capital Framework and Risk-Based Capital Tool, the BIMA Lab InsurTech Accelerator Platform, and Environmental, Social, and Governance, ESG, among others. Seated here today at this gathering are distinguished stakeholders of the African insurance industry who have left their very pressing demands to join us for this event. Let me quickly, therefore, assure you that we at the National Insurance Commission are committed to ensuring that the interests of all stakeholders and needs are met. We are therefore excited to be co-hosting this event and honored to have all of you here. Finally, I want to express the National Insurance Commission's heartfelt greeting to each and every one of you for making it here, and thank you very much. Thank you.
Thank you very much, Mr. Adamu Balenti, the Director, Research, Statistics and Publication at the National Insurance Commission. Next is also remarks from the Director, Risk and Resilience, FSD Africa, Calvin Masingam. Okay, Mr. Elias is going to deliver the remarks on his behalf. Thank you.
Good morning, ladies and gentlemen. Good morning. Welcome to the land of, you know, the MMA champion, Nigeria, right? You know, Nigeria really represents the powerhouse of Africa, right? Because if you talk about the top boxers in the world, they come from Nigeria. You talk about the guys that do fight, the likes of Israel Adesanya, come from Nigeria. So we appreciate being in this particular powerful land, right? So mine is just to first appreciate all of us that are joining for this particular wonderful launch. And really, I believe that it's an exciting time for Africa because we need to work together. Now, maybe just to kind of go through the protocol, and I'm not really good on protocol. Commissioner of Insurance, Mr. Thomas Andy, the CEO of FSD Africa, Mark Napier, the representative of the British High Commission, Bola Karim, the Secretary General of CIMA region, Blaise Abel Ezo. It's great to have all of you, and I know there are so many other people that are joining from different countries, and I appreciate that you took time to fly into the land of promise, Nigeria. Now, I just want to kind of just take us through why we are here. And the key thing is that we believe that we have to cooperate, we have to work together to change Africa. Now, one of the key things that is highly talked about is that for us to go far, we have to move together. But one of the key things that maybe we try to do is to move faster, and in a way we kind of can tire along the way. So we believe that for us to get Africa and create the new pathways to prosperity and resilience, we have to bring Africa together. And that's the essence why we are talking about risk, resilience, and regulatory lab. Now, there are so many challenges that we are currently facing in Africa. And ideally, if you look at the numbers, within the protection gap, it's still high. It's talked about that insurance penetration in Africa is still below 3%. And if you look at what we talk about, the world average should be around 7%. That means that there's some work that we need to do. And also, it's not only work, that also represents an opportunity for all of us to attain that particular goal. So we believe as FSD Africa that we can work with financial systems, and that's why we are here. We want to kind of make finance work for us. And for us to do that, we have to really create this, I would say, an approach that will be commensurate and proportionate to our talent, because Africa has the right talent, Africa has the right resources, but also we just need to kind of catalyze that. And for us to catalyze that, we have to initiate these particular platforms. So I don't want really to put you through a lot of stories. I know we have an exciting day ahead of us. But one thing that I want us to kind of put in our mind is that we are ready for change, and we can be the change that is needed for Africa. Mine is just to appreciate and really thank you for joining us this morning, and we are going to have a very interactive and a fruitful day. Thank you very much.
Thank you very much, Elias. As he has said, the program is going to give us a kind of graduating excitement. We didn't want to say much about what R3Lab is, as we have people that will come and tell us exactly what it is and what is its benefit. So we will graduate to and get to that by God's grace. Next, speeches from distinguished personalities who are spearheading the agencies that brought us here. To start with, I would like to invite Mike Napier, the CEO, FSD Africa. Please, can we give him a round of applause?
Good morning. Thank you to everybody for coming, and it really is incredibly reassuring, actually, to have a room that's as full as this on quite a technical topic, because it sort of suggests that people are genuinely interested in the change that Elias was talking about, and it's really exciting, actually, to have that, and we really appreciate everybody in this room for sparing the time. I'm going to be also quite efficient, because I know we're running a little bit behind time, but I just wanted to start by thanking NICOM for their partnership on this one, and for showing great leadership, Commissioner Thomas, in this enterprise. Also your colleagues, Usman, and all your colleagues involved in mobilizing this event. We can't do our work without partnership. And our job really is to support the partners in the system. So we're very grateful for that. And I think it's a testimony to your pulling power that we have so many people in the room today. So thank you for that. And to people who have traveled as well, Seema, and to our Kenyan colleagues, thank you for making the effort. We all can learn from each other, and I think that's very exciting. I actually wanted to, even though the room is comprised of a mix of people from the industry and also the regulators, I did actually want to start by recognizing the role of regulators, because I think oftentimes people don't recognize or appreciate the challenges of the role, and from when I think back at my own my own career on this financial sector development piece. When I came into working on financial sector development in a broad sense, out of investment banking, which is where I was previously, I had no real appreciation at all of the complexity of the regulator's role. And we used to talk then a lot about the regulator's dilemma, this whole business of having to, on the one hand, supervise and license and do all those good things, but also with that awesome responsibility to develop the market as well, which is something I had no real appreciation for, and particularly where resources are scarce, as they are in most of the countries on this continent. You find very quickly that all the money gets used up on the supervision and the licensing, and leaves very, very little else for actually developing the market. So the role that regulators can play with those very, very thin resources to create the space for a more competitive and a more inclusive market, I think we just need to recognize that. It's a very difficult challenge that they have, and I think when we have organizations like NICOM that are prepared to really think creatively about how to embrace that challenge, I think we should be celebrating that. So that's kind of what I wanted to start by saying. And to recognize the exposure that regulators have, especially in this area of innovation, where we have quite complex new challenges coming. Making decisions around innovation means going out on a limb, sticking your neck out, and often engaging with private sector firms who probably have more capacity than you in terms of money, maybe have more analytical capacity also than you. So I think it's important that we recognize the difficult and significant job that you do. So that's why I think R3 is very important, and at the core of R3 is this collaborative idea which Elias was talking about. And really that speaks to our role as FSD Africa as a market facilitator. When you think about, well, what does it, that all sounds a bit waffly, what does a market facilitator really do? You know, fundamentally it's about bringing people together behind new ideas for how to expand the market. R3 really is a classic example of that. So collaboration, bringing people together, peer learning, doesn't really cost a lot of money, but it does take a bit of organization, and that's really what we're here to try to bring about. And I personally think the act of the act of coming together to solve common problems, and we all have the shared problems, I think can go a long way to building trust and to creating close and long-lasting professional relationships. And I think that augurs really well for the development of the continent. That I think is the ideology that's underpinning R3, and that's pretty exciting. I think to collaborate in a genuine way with our peers, I think ultimately will produce better outcomes for everybody. For those of you who don't know FSD Africa, we are funded by the UK government. Thank you, Bola, for your time and for your support. But we're funded by the UK government. I'm based in Nairobi. I have the privilege of leading a team of about 65, 70 people who are doing fantastic work across the whole of the continent. My job is sort of the easy one. I'm very, very reliant on people like Elias, Zilla, where's Zilla? Zilla over there, and Juliet over here. In fact, there are a whole bunch of us. Nelson, Angela, we're all here. So when we're excited, we're here in force because we want to get to know Nigeria a little bit better, and we're excited by being able to do that. So our job is really about facilitating change in financial markets. We're a change agent. And so that means bringing a little bit of money, but also networks and ideas to change the status quo. So I think we're here because we consider the status quo to be suboptimal in some way. And so we want to see things improve, and we can help in our small way, and we must be modest about what we can do as a donor agency. You're the guys who are really taking the risk and having to push the initiatives. But we will do what we can do to help get that change to happen. We have also a strong link into the capital market development piece as well. So I know today's discussion is principally about the risk side, but we're very excited about the role that insurance companies can play in supporting investment into Africa's future, and the role that insurance will play on financing sustainable growth on the continent in the future. I'm going to really stop there, but maybe just to emphasize a final point, which is really around resilience, one of the R's in here, which is to do with sustainability, and I think that's what's kind of particularly exciting me at the moment, is really the role that private insurance can play in building a genuinely more resilient future for individuals, households, firms, and governments, including state governments, around resilience when we contemplate the kind of climate risks that we are looking at now. So it's a very turbulent environment that we're looking at the moment, and I think there are very exciting things that we can do to ensure that not only are physical risks protected, or are we protected against physical risk, but we're also able to strengthen the financial resilience of companies and indeed government agencies to those climate risks that we're facing. So thank you again for coming. Really appreciate your time, and I hope you have very fruitful discussions. Thanks.
Thank you very much, Mr. Mark, for this presentation. I believe you all must agree with the fact that we are gradually unveiling why we are here and what exactly R3Lab is going to do. Next, we are going to invite the representative of the Deputy High Commissioner, UK High Commission in Nigeria, in the person of Bola Karimo.
Right. Good morning, everyone. I'm very excited to be here. I stand on all existing protocols, and that's easier than trying to repeat everything else. My name is Bola Karimo. I'm a private sector development advisor and also the finance lead for FCDO Nigeria. I'm stepping in on behalf of the British Deputy High Commissioner, Ben Lillewin-Jones, who is unavoidably absent today, and he sends his warm regards and full support for the program. The UK government has always prioritized and valued relationship with the Nigerian government. We've been doing this for quite a long time, as well as with the private sector. The financial sector, both regulators and the private institutions, has always been a big part of this relationship. Now, the British government is committed to strengthening partnerships and continue to be a force for good in supporting Nigeria in achieving its SDG goals. And of course, now with the main topic around climate, also trying to build climate resilience. COVID-19 has necessitated countries to improve resilience against economic shocks. And we all agree that innovative insurance has become an important vehicle for addressing emerging vulnerabilities among not just businesses as well as households. I would like to commend the leadership of NICOM for its championing of innovation in the insurance industry. Again, building up from relationship with NICOM, the Billman Lab, and then feeding it into the R3Lab. As such, partnership between NICOM and FSD Africa is very crucial in developing an inclusive ecosystem, co-creating market-friendly solutions, as well as formulating policies that would catalyze a thriving insurance sector. As such, the R3Lab is well positioned to help facilitate interactions between insurance actors, allowing to improve the methodologies and develop solutions to enable a very thriving ecosystem. And we are very confident in the support of the Commissioner, thank you very much, and his team in achieving this. So, in conclusion, it's our duty to make sure that insurance works for everyone, not just for people in the urban or urban periphery, but those that are actually excluded, those at the bottom of the pyramid, and those in the crucial aspect of the economy. I'd like to thank everyone here today, and as I said, we're very happy to support NICOM and will continue to be a force for good in Nigeria. Thank you very much.
Thank you very much, Bola Karimu, for your brief, precise speech. Next, we are going to invite the Commissioner for Insurance, who has been leading the Nigerian insurance market through the recent reforms, in the person of Mr. O.S. Thomas.
Yeah, good morning, everyone. I know the protocol has been well established, but I must acknowledge the contribution of UK aid and FSD Africa as our development partners, quite instrumental to some of the little achievements with respect to the initiatives in the Commission and, of course, the Nigerian insurance industry. And on that note, ladies and gentlemen, I welcome each and every one of us to this occasion. I'm pleased to welcome you to the launch of the Risk, Resilience, and Regulatory Laboratory, R3Lab. This event was conceived by our development partners, Financial Sector Deepening Africa, FSD Africa, funded by UK AID. The setting up of the R3Lab was given impetus by our mutual interest in maximizing the untapped potential of African insurance industry and exploring ways in which collaboration, technology, and insurance supervisory capacity building is capable of not only mitigating the impact of specific challenges experienced in the regulatory environment, but also improve the regulatory effectiveness of African insurance supervisory authorities. I'm happy our friend from Kenya is here. Our colleague from Sierra Leone, probably is also supposed to be here. He'll probably join us later. We are all aware of the evolving risks in Africa economic space, such as climate change, pandemics, digitalization, inadequate understanding and lack of confidence in the insurance sector, and the need for new strategies to enhance the capabilities of African insurance supervisory authorities to effectively regulate and protect insurance policyholders. The R3Lab offers a three-tier approach towards creating and enabling regulatory environment and equipping the regulator with sound, proportionate, and fit-for-purpose practices. Risk, resilience, and regulation are the key entry points for the R3Lab to build the technical capacity and skills of the regulator on innovation and sustainable insurance. The R3Lab will facilitate the design of customized capacity building programs and set up peer-to-peer exchange platforms, comprehensive learning tools, a resource center for data collection and reporting, and topical task forces and forums for insurance supervisors in Africa. I'm pleased to confirm that this platform is the third joint initiative that has been birthed through FSD Africa's partnership with NICOM. The first was FSD Africa's ongoing support to the Commission in the review of existing regulations, including identifying and articulating the key steps, frameworks, and tools required by NICOM for risk-based capital. It is a common knowledge that we are just starting the deployment of risk-based supervision in the market, and we want to migrate from there to the implementation of risk-based capital, by which case the issues that surrounds capitalization will no longer be an issue in the market. Ladies and gentlemen, this will enable NICOM fully implement a scalable ROBC framework in Nigeria, as well as to help it develop an innovation framework for NICOM to fulfill its dual objectives of market development and policyholders' protection. It is also gratifying to state that FSD Africa, in furtherance of its support to NICOM and the Nigerian insurance industry, will officially launch the second project, the Bima Lab InsurTech Accelerator. It was launched in February 2022, and some of us were present as an online launching. The platform selects, coaches, and mentors InsurTech firms, granting these firms access to FSD Africa Bima Lab grant fund in developing innovative business solutions focused on solving compelling economic and social problems. I understand 10 selected participants are already undergoing 10 weeks intensive mentorship and coaching. I want to say thank you to FSD for this great initiative. Let me, on behalf of the management and staff of the National Insurance Commission, express our profound and sincere gratitude to FSD Africa. It is my hope that through the commissioning of these projects and platforms, we create an enabling environment for the development of insurance products which address the day-to-day challenges experienced by Nigerians in the face of environmental-related risks. Availability of better product is likely to result in better service delivery and increased financial returns to investors. In recognition of these, the National Insurance Commission aims to achieve greater public trust and confidence in the insurance sector through innovation, distribution, and effective, efficient service delivery, which has been the cornerstone of our strategic focus and actions. Ladies and gentlemen, I wish to conclude my remarks by thanking you all once again for joining us as we mark the new milestone in Africa's path towards achieving a more resilient insurance sector, which will inevitably improve the standard of living of Africans and entrench sustainability in the business space. I thank you for your attention and have a fruitful day. Thank you.
Thank you very much, the Commissioner for Insurance, Mr. O.S. Thomas. While we were having that session, we have in our midst the Director General of the Nigeria Insurance Association, Mrs. Yetunde Ilori. You're welcome, madam. I believe we have great gentlemen that presented. As an anchoring person, most times you battle with time, but thank God they have really given us enough time to catch up with the one we lost. Next is the reason why we are here. We are going to have a speech about what R3Lab is. What is it expected to do? What are the benefits? And how do we go about it? And this will be taken by nobody other than the eloquent Elias. And for Lagosians, yesterday he said he wants to explore Lagos. And when we asked him, do you want to go? He said Ikorodu. And I said, find out from Lagosians before you go to Ikorodu. So Elias, you can find out from Lagosians that are here before you go to Ikorodu. Thank you.
Thank you very much. I don't know which company will offer me an insurance policy to go to Ikorodu because somebody told me that I needed one. But anyway, thank you very much. And I think our speakers have kind of given me a lighter role this morning because they've already highlighted why we are here and what is all about R3. So maybe I'll kind of just take us through what this lab is all about, right? So just bear with me, a couple of slides. I know we don't really like to sometimes to go through slides, but let's discuss what is this risk resilience, risk resilience and regulatory lab, and maybe just to kind of look at some facts because we want to start from the facts, then we look at how then do we solve this particular fact. So one of the key things that we all know is that Africa is significantly underprotected and people are still exposed to the normal risks that a normal African will basically be exposed to. And further to that, Africa is also highly exposed to natural calamities and disasters. And ideally, that also throws a lot of Africans to live below the poverty line. Maybe a couple of statistics. Africa industry still is valued around $68 billion in terms of gross written premiums. Around 91% of these premiums come from just 10 countries. And ideally, over 70% of that 91% of those premiums come from the South, essentially South Africa. Now, South Africa really is one of the is the largest markets in Africa, and ideally 70% of that premium come from South Africa. Over and above that, the premium per capita is 11-fold lower than the world average. So that really tells you what we need to do just to ensure that we can create that growth. Now, there's the beauty behind this sad story is that we can always have an area for growth. Ideally, there's a big room for us to grow, and that really means that we really need to work together to ensure that particular growth. I did mention that the penetration is quite low, below 3%, and apparently the world average sits at 7%. What do we need to do? We need to work harder, we need to work together to get ourselves to a particular level of growth. Maybe just to kind of look at the challenges that we are facing in risk markets. And this is kind of, will kind of give us a representation on what we need to do. And if you kind of divide the risk markets into three zones, maybe think about the micro side, think about the meso side, think about the macro side, then there are two compelling elements that will always come to your mind. One of it is weak demand. In terms of Africans really ready to get protection, or are they really highly relying on some of the traditional methods of protection, whereby in Africa you have to give birth to so many kids so that if a few of them manage to get employed, then you have a good retirement package. I happen to come from a family of 10, and maybe I'm the risk. I was the policy in that particular family. Now, ideally, what basically comes is that there is lack of awareness, and in that, with that lack of awareness, then understanding becomes a very major issue when it comes to risk transfer solutions. So there's need to kind of create awareness, and I've seen so many regulators across Africa trying to really take this particular role in a bigger way. At the same time, with that particular compartment, issues around affordability come into play. Africans really ready to purchase? Is it that the products are quite unaffordable? How does government and policymakers work around issues around affordability? There's issue around distrust, right? Most of the time when you get to a customer and kind of talk to him about insurance, they kind of tend not to really appreciate what insurance companies do offer because of there's a growth of mistrust and perception that is really across the continent. So how then do we create trust within this particular insurance value chain? There is informality. There are also a bit of inconsistent government budgeting around risk. At the same time, then there is also a poor understanding of climate risk. Now, statistically, if we don't do anything about climate risk, around 30% of the African GDP will be lost by 2050. So that really means that we really need to start looking at climate risk at a very high level. Then in terms of the quality side, in terms of the supply side, then Africans, or basically within the continent, we kind of lack expertise on complex risks. We need to start looking at how then do we address some of these complex risks. But within that, they'll be able to see that there are lower margins, whereby most of the time, when we are exposed to these particular risks, what an insurance company would do is to transfer that risk to another market, because they might not really have the adequate capacity to take care of that particular risk. There's also ineffective market reach. Companies are highly located in urbanized regions, right? But I don't know whether there's a company in Ikorodu. Maybe somebody will let me know. But are we able to reach out to these particular persons? Reach is quite an element that we really need to think about. There are issues around lack of data. We are still harnessing that data, and we really need to work around the aspects of data. We have to work with the existing ecosystem. And in this case, think about the aggregators that can really enable us to reach out to those particular market spaces. Models also need to be worked on, and also maybe think about the risk profile, risk return profile. Are we really able to get the right returns out of this? Now, encompassing all that is now the regulatory aspect. And within that, then we need to ask ourselves, are we having a more progressive or a restrictive regulatory environment? And in most of the time, if you kind of have these discussions with a number of industry actors, they'll tell you that within all these particular challenges, there's a ring around it, and that is a very restrictive regulatory environment. And we want to see how then we can work around creating a regulatory environment that will be responsive to these particular elements that we are facing in this particular continent, and in a way enable us to change the aspects that will be able to create a resilient market going forward. So some of the complexities, and I think we did mention these in a number of the speeches that have already been mentioned. The changing regulatory mandates is something that now we see. In the past, regulators were just looking at, I'm giving you a piece of paper to go and do your business. And you had to operate within that particular space. Now, over and above that, we've seen that there are new requirements that are coming through. Most of regulators are now have more of a market development role. But over and above that, we've seen regulators trying to address the broader policy issues. So for instance, think about having an inclusive economic development. Think about issues of sustainability, because that must be key, must be something that must be discussed within the regulatory board. The issues around climate risk, and COVID did well. People had to be forced to start digitizing. Maybe if you could have ranked digitization before COVID in any board meeting, maybe they were not really prepared, but with COVID, people had to think about digitization and it had to be implemented. But there's still a long way to go. How then do we ensure that this is all reflective in how we look at our risk markets? Issues around technical capacity is key, and that is something that we need to kind of work around. And resources, because we have to bring resources within play just to ensure that we create an environment that will be looking at the issues that we need this particular market to resolve. So if we look at this and kind of ask ourselves, what is FSD Africa role in facilitating this market change? And we kind of look at it from a bottom-up approach, right? I know some people will be excited when I talk about bottom-up if you come from East Africa. But we are in Nigeria, so I'll explain why bottom-up is exciting on the East African side, but maybe it might not be exciting on this other side of the continent. Now, we want to look at this in a very holistic way. One way is by creating or raising awareness. And we want to raise awareness on market transparency and basically looking at broader policy issues. So are we able to create opportunities within the African continent? Are we able to kind of push these particular opportunities to African investors, the financial institutions and the regulators, such that we enhance market transparency? The second bit is building leadership, because for all this, we must have thought leaders within the ecosystem. Without proper leadership and without appreciation of these cultures that enhance these changes that are needed to achieve broader policy objectives, then we won't be able to create the rightful change that is needed within the continent. Also, we believe that innovation is key. We have to always innovate and provide tools that will create thought leadership and encourage innovative thinking. And without us doing that, then we'll not be able to create the transformative change that needs to be created going forward. Over and above that, I think skills and capacity building is one of the key components that we will highly utilize just to ensure that we develop a greener environment. And that's why today you've seen a lot of items are in green. So just know that we are really advocating for a green continent going forward. So what is R3? Now R3 looks at three basic components. We must collaborate, we must cooperate, and we must interact. Because for us to transform Africa, we cannot have silo thinking, we cannot have silo operations, but we have to have a cross-transactional way in which we are going to address these particular issues. So is it possible for us to create an ecosystem across West Africa that will be transformative in terms of maybe increasing the insurance penetration within this region to around 4% maybe in the next 5 years, right? There is a possibility for us working together. That might mean that maybe we might need to create insurtech bridges. Is it possible for an insurtech to move from Ghana to Nigeria to basically solve the same challenges that are faced by Nigerians, if that particular product is capable of meeting all the needs of those particular persons that are in Lagos? It's quite maybe it's something that we need to think about, but there's a possibility of achieving all that. Is it possible for maybe an insurtech working in Sima region to operate within the entire Sima region, Mr. Blaze? there is a possibility. And that's what we are talking about. How can we cooperate? How can we collaborate? And how can we interact? So this will be a platform. And ideally, this particular platform will kind of create that particular engagement within having a mechanism that will bring and strengthen the methodologies that we subscribe to. It will be highly principle-based because we believe principles can easily be reflected across the countries that we are currently serving. At the end of the day, if you remember the diagram that I had on my second slide, it's basically breaking that particular fence, whereby we are going to create an enabling environment, not limiting the areas that we can allow our markets to play. Other than that, we are going to increase knowledge that we have within the supervisory authorities and create a fit and proportionate regulatory environment going forward. We want to support actions and initiatives, and I'll be able to highlight some of the actions and initiatives that we've already created as FSD Africa in countries like Ghana, and I'm happy that the Ghanaian team is here with us today, and also with countries like Nigeria, Kenya, Ethiopia, just to kind of start creating that particular change within the ecosystem. So we want to build technical capacity within these regulatory authorities that will support innovation and sustainable insurance. Then the other thing is we need to foster networks, right? One of the key things that I've learned as a regulator in my past life is that it's quite difficult to kind of have a very fostering or a very enabling cooperation amongst different supervisors. But with this, we want to ensure that you have a real-time engagement. So is it possible for a supervisor sitting in Gabon easily interact with a supervisor that is in South Africa and have a discussion that will enable them save or manage some of the challenges they are facing? Is there a possibility, instead of a regulator really trying to struggle to draft a new microinsurance guideline, can be able to kind of interact with other regulators that have already developed that and have already gone through nuances around development of these regulations, and ask what other practices should we be aware about? So we want to create this within this particular ecosystem. But at the last is that we want to create and build a multinational team of leaders, right? Because I don't know if today we say Thomas exits, will he be able to have a good mentor? He has mentored somebody around him that will be able to take NICOM to the next level. And that is what we want to achieve, whereby we don't really have gaps in terms of creating the meaningful change going forward. So think about a regulatory exchange. I appreciate the foreign exchange here. You don't have to struggle. Within, you can easily be able to change your dollars. And that's the same thing we want to do. You can easily change your regulatory knowledge, right? So you can basically get into this particular platform, tag somebody that you want to talk to, and engage that particular person. So we want to support the development of common understanding of risks, because the risks are the same. It doesn't matter where you are in this particular continent. We kind of face the same risks. We kind of want to promote a shared agenda of addressing these particular risks. At the end of the day, we solve the vulnerabilities that we face as a continent. And we are looking at this by two key programs that we've initiated already. We've already initiated an ESG integration project here in Nigeria. And that particular project is also being managed in Ghana and Kenya as our flagship projects. And what we are trying to do within these particular countries is that, can we have a shared agenda across the three countries? And once we complete these three countries, is it something that we can reflect across wider Africa based on the learnings that we've already achieved out of these particular countries. Also, what we've done, we are currently doing an innovation and regulatory portraits across 8 countries, and I'll be able to mention those particular 8 countries. And what we are trying to do within that is we want to highlight the state of play across innovation. So ideally, we are working with the National Insurance Commission in Ghana. We are working with the National Insurance Commission, NICOM, Nigeria, and the Insurance Regulatory Authority of Kenya, whereby we are going to ensure that these particular countries have a very integrated way of looking at environmental, social, and governance issues. Now, some of the key objectives of this particular project is that we want to establish perceptions, capabilities, and practices across African insurance industry towards addressing ESG issues and within their operations and strategy. So it's not only creating another piece of regulation, but we want to also work with the industry to kind of look at how they operate and develop their strategies. Can insurance companies really think about ESG at a board level? Is climate risk an item that board members of an insurance company are able to discuss, right? So that we create the rightful perception and establish this particular change across the continent. The second component is to support actions that will kind of build the insurance capacity within these particular regions to improve how they consider ESG in their operations and strategy. We want to launch a coalition of champions, and we'll be discussing this tomorrow. How can we become a continent of champions in addressing some of these particular issues that are really affecting our continent? And over and above that, we want to catalyze an enabling regulatory environment that will address some of ESG regulation and disclosure. I won't go into detail around this because we are looking at diagnosing, we are looking at equipping, we are looking at integrating as key elements of achieving this change within the continent. And in this, we want to understand the global ESG related regulatory trends and kind of prioritize on ESG risks. We want to develop a framework and a toolkit. And this toolkit will be available both to the regulator and to the insurance industry players in which they can assess their own needs when it comes to ESG risks. Over and above that, integrate and build capacity, because again, we must build capacity within the region. In terms of the regulatory portraits, we are looking at it on 3 levels, and this study has already been initiated in 8 countries, whereby we have Ghana, Nigeria, Kenya, Ethiopia, Malawi, Uganda, Rwanda, and Zimbabwe. We've already completed work in Ghana and Kenya, and we are soon providing some key action points on what we need to do in those 2 countries. The other countries are still ongoing, and we'll be able to kind of share some of the resources that we've identified in these particular countries. But ideally is to review and assess the state of innovation in these particular countries. We want to take stock of the challenges that do affect these countries in terms of barriers to further innovation. At the end of the day, we are creating a very tailored innovation action plan. It's not just producing a report. We are not in the business of giving you another piece of paper. We are looking at, we are basically in a business whereby we want to discuss some of these particular action points and agree with the industry on how do we achieve those action points and what are the timelines behind it. So it is a very measurable component that we are working on just to ensure that we create the meaningful change. So these are some of the 2 initiatives that we've already undertaken when it comes to R3Lab. I won't go into details into this, and I know we'll be talking about this in the next couple of days, whereby we want to ensure that when you regulate for innovation, the innovators come to you as a regulator. Most of the time, innovators like hiding from the regulators. Just that because you don't want either to be given a natural death, killed through unnatural death. You know, you just want to die naturally, but most of the time somebody will just strangle you as an innovator, and you'll kick the bucket. But that should not be the case. So we are going to look at how then do we create a very responsible innovation, and how do we regulate this. So in terms of looking at the mandates, we need to look at whether there is a mandate that will support innovators, whether there is a policy direction that will support the innovators, whether we can monitor the changes around the innovations over time, just to kind of harness this within our ecosystem. Now, we are going to develop a number of tools. Think about the engagement tools that will look at both industry and non-industry, because the innovations will not only come from the industry. Innovations will even come outside your purview. So just think about an innovator that has never done any component around providing products that support risks and resilience. And this particular person has a very interesting innovation. Can you give them an opportunity to help you transform the market? So we're going to look at these issues across the ecosystem, and within that then look at what are the regulatory tools that we need to bring into play when it comes to regulating responsible innovation. Above that, we are going to create a resource center, and this is whereby you'll get most of the documents, most of the work that we've already done as FSD Africa within different countries across the continent. We are also going to kind of provide some guidance, some white papers that will help the different industries going forward. And in this case, think about the risk markets within Africa. And this information will be available to the regulators to enable them share that within the financial system. Maybe just a quick question. Have you ever thought of creating an AI that, say, I've seen a couple of insurtechs in the room. You know, most of the time, when an innovator is working on his innovation, he doesn't have time to go through the Insurance Act, right? He will just work, and then after that, he'll wait for the regulator to come. And his prayer is that I want the regulator to come in good spirit. You know, you pray that he wakes up in the morning when he's good. So when he meets you, you'll have a very good conversation. There's a book that I usually say it's 3 cups of tea, right? So we need to have a number of cups of tea with the regulator. So you have the first cup of tea, tell you take another cup of tea. So you'll be discussing the innovation at the same time trying to understand what regulations entail around innovation. So are we able to kind of have 3 cups of tea with the regulators? Other than even before you have a cup of tea, the next thing you are thrown in a van and told we shouldn't want to see you selling this thing going forward. So we want to kind of create a resource center whereby is it possible to put a regulatory AI, artificial intelligence, that in case an insurtech searches a particular thing around your innovation, he will be guided on, okay, fine, these are the key things that you might need to think about. And that will kind of enable them. Other than just waiting for you to pounce on them, you'll kind of give them a platform whereby they can go in there and try to have those cups of tea with you. In this case, it will be virtual cups of tea. So another thing is that we are going to develop an R3Lab data box. We believe data is crucially important for this particular industry and also for Africa as a continent. And in this, we want to kind of have to look at what are the changing data needs. Because with the broader policy initiatives that are currently affecting this continent, we need to think about how then do we kind of harness these data. We are also aware that we need to collect data to create new products within this particular market. And what we intend to do is kind of develop a data working group that will provide input and share the experience within that particular data ecosystem, and also enhance data quality going forward. Think about supervisory technology. Think about regulatory technology. RegTech and SupTech at the core of these particular components going forward. Maybe just to conclude, our intention is to apply leverage within the continent as FSD Africa. So look at us sitting at the middle of these two components. We have a fragmented and a developed risk markets, particularly in year 2021, year 2022, quite fragmented. We have low insurance penetration. We have a sector that only covers 2% of disaster-induced risks. We have challenges across demand, supply instruments. So what we want to apply is to apply leverage, because maybe we need to sit at the missing middle. And what we want to do is that, can we be able to come back in the next 2 years here in Lagos and say that the insurance penetration, Mr. Thomas, has increased from the current number to maybe a 0.5% increase that all of us will be able to celebrate. So we want to kind of increase insurance penetration across the region. We want to look at how we can increase coverage of catastrophe risks and climate risks through public and private sector. We want to increase investments in risk transfer capital mobilized by financial sector to support Africa towards green transition. We want to basically increase cohesion between demand and supply side of instrument at the 3 levels: micro, meso, and macro levels. I would want to end at that, but just to conclude, we have an opportunity to transform Africa, and we cannot do that by maybe Kenya running faster than Uganda, or okay, fine, Kenya has good athletes so they can run, but we don't want them to run within the risk markets. We want you to kind of even wait for others, right? We cannot have a very strong Nigerian market, the likes of Israel Adesanya, boxing everybody and putting them on the ground. But we can bring all these differences and similarities together to create the meaningful change, because we believe at any difference and any similarity, there's that bottom line that brings us together as a continent. So what we want to achieve is to look at where are these similarities and what is the bottom line that we can engage as a continent to create a difference. Thank you very much, and welcome to the R3Lab.
Please, another round of applause for Mr. Elias Omondi for this wonderful presentation. I believe at this juncture, most of us that don't understand what R3Lab is will have or must have had a broader view of what R3Lab is all about, its objectives, what is needed to achieve, and how we are going about it. At this point, we are going to take a break of 30 minutes to stretch our legs, network, have some tea or coffee, and then we will come back to continue this program. It will get more interesting because we are going to have a panel that are going to discuss issues around technology and insurance. Ladies and gentlemen, we'll take a 30 minutes break, then we will come back and continue. Thank you very much. To this session, we are actually supposed to go for the panelist session, but due to some circumstances, we are going to take the presentation from Nicola Bayers, an associate of Semfree, on insurance supervisors' response to COVID-19, learnings on efficacy. Nicola, you're welcome.
Cool. Hi, everyone. Good afternoon. It's really wonderful to be here in person with everyone today. This is actually the first time that I get to travel outside of South Africa since February 2020. So it's wonderful to be here in person today and to get to see your faces, some with masks, some without. All right, so thank you very much to FSD Africa for the opportunity to speak here today. Thank you very much to NICOM. Thank you to UK Aid. I'm very happy to be here today because I'll be taking you through some of our key findings on a project that seeks to understand more about the efficacy of insurance regulators' responses to COVID-19. So, just to check that, there we go, thank you. Cool. So, at the start of the pandemic, Senfree, the organization I work for, in collaboration with and with support from OSI and FSD Africa, conducted a project on the impact of COVID-19 on insurance industries across sub-Saharan Africa. So the research that we conducted at the start basically highlighted that the pandemic was having quite a severe negative impact on insurance industries across the continent. So insurers were struggling to process claims, to collect premiums, to conduct new business. And not only insurers, but insurance supervisors themselves were also affected by the pandemic and forced in a way to balance, on the one hand, the need to free up industry capacity to support them to cope with the effects of the pandemic, while also needing to monitor the impact of the pandemic on individual entities and the market as a whole. So the current research and what I'm going to be talking to you about today builds on that project to really unpack not only how insurance supervisors responded, but what the efficacy of those responses has been. So how effective has what insurance supervisors have done been in mitigating the impact of the crisis? And specifically, part of unpacking this issue of efficacy seeks also to understand, in the face of large-scale systemic risks, so not just a pandemic, how can supervisors go about responding? What is the best way to think about a response to such a large-scale risk? And I think we've already seen from the presentations today on the R3Lab a focus on ESG, so environmental, sustainable, and governance factors. And those types of issues and the risks that they entail speak to the objective for this project as well. So just as you can see on the slide here, we spoke to 15 regulators across 27 countries to understand the longer-term impact of the pandemic. And I'm happy to see some of the representatives from some of the regulators that we spoke to in the room here today. So thank you very much for your attention. So our conversations with regulators and with industry members indeed reveal that COVID-19 in the medium term has continued to have this significant impact on insurance markets, and that regulators have seen their mandate to respond be heightened. So Elias earlier spoke about the shift in regulators' mandate from prudential impact or only market stability to focusing on market conduct as well as on market development. And we see the impact of COVID-19 really touching on all of these aspects. So negatively affecting regulated entities' ability to submit reporting requirements. In some cases, even affecting their solvency and capital adequacy. Where market conduct is concerned, we see policyholders sometimes unable to keep paying their premiums and how that affects their interactions with insurers. And then finally, from a market development perspective, and I think this was mentioned earlier as well, the imperative for digitalization that COVID-19 has in fact entailed is part of this sort of market development aspect that insurance regulators are increasingly having to keep in mind. So, cognizant of the size of the impact and the variety of ways in which COVID-19 has affected their markets, regulators have taken action in a variety of ways. And what you see here on the slide is the results of quite a small-scale survey that we launched in collaboration with OSI, which is the Organization of East and Southern African Insurers, basically showing how regulators responded and the extent to which their responses were considered to be effective at supporting insurers' businesses. And as you can see on the slide here, extending reporting requirement deadlines seemed to be something that was widely implemented, but also something that regulated entities understood to be supportive of their business. But I think as you'll see later on in the presentation, it's not quite so clear-cut from a regulatory perspective how to balance this need for freeing up capacity from industry with the need to also keep monitoring what's happening and to remain cognizant of the different risks in the market. So, as I mentioned, our focus here for this project is really on how regulators responded to support industry in the face of COVID-19. And the key themes that emerged from our discussions were used as the basis for a framework that we created, which we call the Regulatory Response Framework for regulators, the objective of which is really to serve as a tangible guide for insurance regulators when they're faced with a large-scale or systemic risk. So, although the findings are based on COVID-19, the discussions we had also extended beyond this particular instance of risk to really think about how other systemic risks could affect insurance industries and how insurance supervisors are best placed to respond. So, the starting point for the framework, and before I jump into it, is these continuous considerations on the slide. So basically, these are factors for regulators to keep in mind irrespective of the systemic risk that they face. Because regulators, as you all know, do not operate in a vacuum. So the efficacy of any specific course of action depends not only on what the regulator itself can do, but also on a variety of factors. And here on the slide, the three key continuous considerations are around the regulatory mandate. So what must the regulator do? What is its role? What is its key responsibilities? What is its objectives? And these factors determine what constitutes a risk to which the regulator must respond. So, for example, in Namibia, NAMFISA's mandate was limited before the enaction of, or before new financial sector acts were implemented, to the extent that it was unable to respond to COVID-19 in the way that it would have wanted to, and unable also to deal with consumer complaints beyond when consumers approach it directly. We see regulators considering different facets of their mandate. So when it comes to balancing, for example, the need for prudential stability with market conduct considerations, the IRA in Uganda actually considered and kept in mind how to protect policyholders by urging insurers to protect policyholders and to cover claims in a legally binding guidance note. Also urging life insurers to exercise flexibility and to consider claims related to COVID-19 in a case-by-case basis in a 2020 circular. Second continuous consideration for regulators to keep in mind, irrespective across the framework, is the scope of its powers and its own resources and capacity. So in Nigeria, for example, NICOM regulates all aspects of the insurance industry, but health insurance is regulated by a separate authority, in the same way that we have in Ghana, health insurance being under the jurisdiction of a separate regulatory authority. We also see differences when it comes to independent or standalone regulators versus regulators where insurance is one department, such as the Reserve Bank of Malawi, for example. So on the one hand, there's a potential for enhanced collaboration, enhanced sharing of learnings when you have this composite regulator. But on the other, there's a chance that perhaps one industry is favored over another in times of a crisis. And then the third aspect to keep in mind, irrespective across the framework, is the relationship that the regulator has with industry, as well as the extent of industry's compliance and capacity. So in other words, when the regulator issues a statement or when the regulator communicates to industry, does industry respond immediately? And what is industry's ability to do so? And when we spoke to the IRA in Kenya, for example, we heard that essentially their need to use strong legally binding documents was reduced because industry does not like to go against what the regulator says. So ultimately, these three factors form the underpinning or the foundation for the framework, which I'll discuss now. Quite a busy slide, but this gives you a sense of the full regulatory response framework that we put together. And essentially, you can see here the starting point being the continuous considerations that I just discussed, with each of the 4 phases then. And what I'll be doing is just taking you through what these 4 phases entail, as well as some key learnings that we gleaned through this project. So when it comes to phase 1, essentially the idea is for the regulator to identify and understand the risk in order to best be able to respond to it. So essentially, this is not to say that the regulator must hold off on doing anything until it has so-called perfect information. Instead, it's about proactively gathering data from various sources on an ongoing basis to understand the impact and to understand how best to respond. So through our conversations, we realized that first, a risk needs to become part of the regulator's agenda in some way, shape, or form. So whether this is something that happens officially, essentially what needs to be determined is who is responsible and how are responsibilities assigned. So for example, is it a specific department? Is it a specially created task team? Is there a working group or a cross-cutting body? So basically what this first step of this first phase means is the regulator devotes sufficient time, sufficient energy to a risk that's identified. Once it's been identified, though, the regulator needs to collect information about what the risk entails and what the needs of industry are that are arising from this risk. So on the slide here, although very small, you can see a range of ways in which the regulator can go about collecting this information. And I'm not going to go through each of them in detail because there is a publication that this presentation is based on that you can go through. But it's interesting that there's there's some overlap between this information gathering tools and the tools mentioned by Elias as part of the regulation for innovation framework. So essentially, we saw considerable bilateral communication between the regulator and regulated entities, engagement with industry associations, so basically bringing together industry associations to represent the needs of industry. Routine quarterly and annual reports were very frequently used, but some regulators, such as the IRA in Kenya, actually had additional reporting requirements to try to understand the impact of the pandemic directly. And then finally, ad hoc surveys and on-site inspections, other types of, the engagement tools that the regulator has at its disposal. And then finally, once the data has been gathered, the point is to analyze that data and to put it together in a way that helps to inform action. So here again, capacity considerations become quite important. So we have a honored representative from CIMA here, and as far as I understand, the regulation there extends to more than 200 regulated entities, which means that for all of the returns that are submitted, that needs to be analyzed in a specific way, brought together, and that obviously has implications for the length of time that it takes to build those insights. In Uganda, however, there's a supervision department as well as a research department which focuses quite directly on market development. So just this sort of the difference in capacity also speaking to how efficient analysis can happen. Elias also spoke about RegTech and SubTech and how that can have an impact in this case on the ability to analyze information. So we see some regulators, like the FSC in Mauritius, able to streamline reporting into one platform, so the FSC1 platform, in fact, whereas others, the pandemic came and kind of disrupted the implementation of online reporting systems that had been planned, such as in Zambia, for example. So on the basis of what we understood this phase to be and our conversations around this phase, we gleaned the following key learnings. So firstly, and I've mentioned this before, so I'm not going to delve into it too much, but the need to balance timely data, so information that really gives as close to real-time a snapshot of what's happening, with industry's need to not be overburdened with requests for information, with standardized reporting. So we have in Namibia, for example, NAMFISA, as well as IPEC in Zimbabwe, extended reporting deadlines, but only for a certain period, and then after a while, only then on a case-by-case basis. Secondly, where regulators relied only on routine annual and quarterly reporting, essentially it made it more difficult for them to fully understand and assess the impact. The FSRA in Eswatini, in fact, actually said that there is some information that you cannot pick up from quarterly returns. So that also speaks into the need for timely information, the need for timely action as well. And then finally, we have this need for proactive engagement to gather targeted information. And I think the FSCA and the PA in South Africa really constitute an example of this, where at some point, when the pandemic was really in its worst almost, they required entities to submit daily returns on certain key metrics, and met with each other and with industry very often to do so. All right, so hopefully you'll still be able to see the bottom of the slide. If not, I'll read it to you. It's okay. Cool. We're on the second phase, which essentially speaks to responding. So now that they have gathered information, analyzed information, understood what the risks are, understood what the impact is and what the needs of industry are, phase two then actually says, well, how should the regulator then respond? What avenue of response should the regulator choose? And we've identified here 3 clusters that are mutually supportive, and they vary in how directive they are and the extent to which regulated entities are subject to penalties if they do not adhere to the response required from the regulatory authority. So the first cluster again speaks to communication from the regulator's side. So first you have inform and engage industry members as well as the general public. So here we've seen almost across the board an increase in communication from the regulators with industry before issuing other instruments. So essentially proactively reaching out to industry, sending out newsletters, bringing industry together to essentially taste what they wanted to release in the form of non-binding guidance or in the form of legally binding documents, which are the other two clusters of responses. So we also saw quite an interesting response from IPEC in Zimbabwe, where they actually conducted training to industry members and beyond to journalists to give them more information about the benefits of insurance, so that in this moment where potentially consumers were more aware of insurance, where it was more salient, the media was able to also provide better information of a better quality to consumers about insurance. The second cluster of responses we identified was on making non-binding recommendations to industry. So in this case, regulated entities essentially can decide whether or not to take it up. And from that perspective, it may be easier for the regulator to issue this type of instrument. So where the FSCA and the Prudential Authority in South Africa were concerned, for example, they essentially extended guidance to regulated entities on the payment of dividends that regulated entities could take up if they needed to, but could choose not to if not. And that's where the key difference then becomes clear from legally binding documents, in which case regulators actually have to approach the legislator to make sure that they are able to amend something that is set in legislation. And here it's, when the regulator needs to ensure that all industry members adhere, and where the regulator needs to make changes to things that are already captured in regulation. So I think one of the key examples here was the FSRA in Eswatini essentially saying, once the government had put restrictions on how fast burials had to happen, the FSRA issued legally binding documents to industry to say claims need to be processed within 24 hours of receiving documents, so that this could then flow into the government restrictions as well. So again, a little bit of chair, a little bit of slides, but I hope you guys are still following. So on the basis of phase 2, we then have the key learnings around what the best way is for regulators to respond here. And I think firstly, from the perspective of creating certainty, from the perspective of entities already facing enhanced a lot of uncertainty, a lot of turmoil in the face of a crisis, for the regulator to actually reach out to other regulatory authorities to ensure that there is some form of coordination, some form of collaboration, which I think is feeds quite well into the theme for the R3Lab as well here. And basically we see that where this did not happen, or where this was difficult, such as in Malawi, for example, the regulator put together lists of actions that it needed to do, that industry needed to do, and that it required from government. But without sufficient government response, its ability to implement those actions was unfortunately constrained. The second key learning for the response phase is on informing and engaging proactively with industry. And I think I've already spoken through the example of IPEC in Zimbabwe and the training sessions that they conducted. What came across very strongly throughout our conversations was this move to risk-based supervision, where for many insurance regulators, they didn't necessarily see regulated entities falling below minimal capital requirements, and didn't see that many entities really struggling. But there was a clear shift between those regulators who are still implementing compliance-based requirements versus risk-based requirements, where the former essentially said, we didn't pick anything up in our current compliance-based framework, but perhaps had we had a risk-based framework in place, we would have seen things that would have made us more worried. So I think that's quite a prominent and quite a pertinent finding from this study, is just, you know, the added emphasis that risk-based supervision has received as a result of this particular crisis. I've also spoken about how making a non-binding recommendation might be a slightly faster, a slightly easier way, slightly more flexible way for the regulator to ensure that industry essentially complies to what it needs to do. So on factors such as, for example, consumer protection, we see premium holidays being something that was implemented, according to our survey at least. 47% of respondents said that the regulator had allowed them to implement premium holidays, and that this had actually helped their business. But I think, again, here it's a bit of a tightrope between what happens from a consumer protection perspective and then what happens to the books of the insurer, who's now giving premium holidays to its customers. And I think we saw one regulator speaking about how the guidelines it had issued around premium holidays was worded in a way that allowed regulated entities to comply if they could. But then when it came down to it, regulated entities approached the regulator to say, we're struggling to meet requirements because you told us to give premium holidays, which unfortunately I don't think that's exactly how it works. But ultimately, this need to keep communicating and to issue instruments that allow the regulator to make changes and to be flexible and adaptable is another key learning from this particular phase. And then finally, we saw many regulators focusing quite heavily on business continuity plans and the need for those to be implemented. So in some regions, business continuity plans weren't necessarily standard practice beforehand. And as a result of COVID-19, we saw regulatory authorities really pushing industry to develop these, to submit these, and that actually, you know, in some instances, that enabled the regulator to get a better picture of what industry's resilience would be going forward for future risks as well. So the third phase is something that's not done that consistently across jurisdictions, but I think it is worth mentioning that essentially once the response has been implemented, the next step is to figure out, has it worked? What has the impact been? How compliant is industry being? And really, is it doing what the regulator wanted it to do? And for how long must the response be implemented? And essentially, this phase uses the tools that I discussed in phase one, or briefly mentioned. So to gather that information and then to try to understand exactly, you know, how effective has the different responses been. And then finally, the fourth phase really speaks to the underlying objective of this project, which is how regulators can use the current risk to prepare for the next one. In our conversations with regulators, we saw that those regulators who had recently experienced systemic risks or who were in the midst of experiencing other systemic risks thought differently about how COVID-19 was affecting their industry. So, for example, IPEC in Zimbabwe spoke about how Zimbabwe's history of hyperinflation essentially meant that it had had to be prepared to think about these types of systemic risks for a while, which meant that certain ways of doing had already been entrenched when COVID came along. We see that the FSC and Mauritius were faced by twin risks, if you will, of, on the one hand, being grey-listed and blacklisted by FATF and by the European Commission for AML-CFT issues, as well as COVID happening at the same time. And so the Mauritian government actually put together task forces and overarching bodies to deal with the grey listing and the blacklisting, which then also helped to feed into the response to COVID-19 and emphasize this need to create a coordination mechanism. And then finally, I think in South Africa, we saw that in July of 2021, political unrest led to rioting and looting, and the PA and the FSCA spoke about leveraging the coordination mechanisms that they'd put in place, during which they would meet the two regulatory entities who, as part of the Twin Peaks model, are jointly responsible for different aspects of regulating the insurance market. How their coordination structures, the meetings that they had, the channels of communication that they'd opened with industry, actually enabled them to respond fairly quickly to this very destabilizing risk and to communicate with industry members about it. So, out of all this, out of the phases of the framework, the key learnings that we identify that speak to some of the pertinent risks that we see arising that might be around the corner in some instances, things like cybersecurity, climate risk, natural disasters. We see the following sort of key learnings and cross-cutting learnings emerging. So, firstly, this idea around quality, real-time information and what that looks like from a regulatory perspective. So, almost all of the regulators we spoke to had some form of online reporting system in place already. And where COVID had accelerated digitalization, in some cases we also saw an increasing ability to do at least some of the initial analysis on a more automatic way. We see in developed countries things like open APIs for banking regulators to extract in real time data from regulated entities. And although this may seem like something that's rather far in the future, I think tools such as RegTech and SubTech have a lot of potential to ease some of the burden here. The second cross-cutting learning is around being proactive, whether it's in engagement, whether it's in communication, whether it is in understanding what the impact of the risk is. The regulator's responsibility in this case is to guide industry and to provide some firm footing for industry to move on in the face of a crisis. One of the insurers we spoke to said, the regulator cannot leave us in the time of a crisis. And in this case here, this doesn't necessarily have to be publishing large-scale reports or conducting overarching surveys. This can be something as simple as a notice published on the website to give industry an idea of where the regulator is at and how the regulator is understanding the impact. But beyond being proactive, the need not to overreact was emphasized as well. So as a risk and its impact evolves, and the regulator understands more about what is happening, it's clear that starting very strong with a very directive statement that closes all other avenues of response very quickly is potentially not the ideal course of action. So there's a need almost to balance being uncertain with being proactive and communicating that uncertainty as well. And then finally, the need to prepare for new risks. And I think through some of the activities of the R3Lab and some of the themes that it focuses on already, helps regulators to think about, what it takes to keep their fingers on the pulse when it comes to the risks that might be just around the corner. Thank you very much for your attention, everybody. I really appreciate it. Thank you.
Thank you very much, Nicola, for this wonderful presentation. COVID-19. I don't know how soon we are going to stop talking about COVID, but indeed we will all agree that it has greatly impacted on our lives, how businesses are being done, how we run our homes, virtually every aspect of our life. Thank you very much. Next is the panelist session. As we get prepared for our panel to come on stage, we have very intelligent, highly placed individuals in different agencies across Africa, whom have gathered here today to discuss the issue of innovation, catalyzing market, growth, and customer centricity. They are going to take us through this topic, and those that are to be on the panel are mostly from the regulatory authorities and also some of the financial agencies. To start with, I would like to call on stage Mr. Abiodun Aribike, who is the head of the Information Technology Department of the National Insurance Commission. Can we please put our hands together for him? Also on the panel is, I hope I will pronounce this one well, Sunday Protasio, the Director of Planning, Market Research and Development, the Insurance Regulatory Authority, Uganda. Please, can we put our hands together? Also on the panel, Hafiz Mohammed, the Head Innovation Unit, National Insurance Commission, Ghana. And also, we have Angela Ama, Component Manager, Program for Sustainable Economic Development, GIZ. Okay, he will represent. Okay. Okay. Apologies, I learned that Angela Ama is not with us, but in her place, Moses Kipton is going to sit, also from Kenya. And then to cap it all is our moderator for this session, Miss Bumi Lawson. Ms. Bumi is the Pioneer Managing Director, Chief Executive, and co-founder of EDFIN, Microinsurance Bank Limited. She is a fellow of the Institute of Chartered Accountants of Nigeria, also member of the Bankers Institute. She sits on the board of directors of many companies. She is a very well-known and reputable accountant. So she is going to moderate this session for us. I believe we are on for a very interesting session. So ladies and gentlemen, I will hand you over to Ms. Bumi Lawson to carry us through this session. Thank you very much.
Hello. Great. So good afternoon, everyone. It's really an honor to be here. My second job was actually in the insurance industry, life insurance. So it's always, it brings back good memories when I have to talk about insurance. And since then, I've focused more on microfinance. That's people at the bottom of the pyramid. And it's always disheartening to me to see that insurance hasn't really penetrated at that retail level. So it's good to have the regulators here today to discuss on how we can actually drive innovation from a regulatory perspective. Innovation comes from operators, of course, as we know, but also regulators really have a significant impact in driving innovation and growth. So let me start off with Moses to tell us what innovation have you done within your country in terms of, from a regulatory perspective, to drive innovation in the insurance industry. Give us a few examples of new regulation that you think drives innovation. Thank you. And please start by introducing yourself. Okay. Before go.
Thank you very much, Bunmi. I think you can all hear me. My name is Moses Kipton. I work with the Insurance Regulatory Authority in Kenya. I'm an assistant manager in the Prudential Supervision Department. But I also lead on innovation issues within the IRA. We do have in place an innovation committee that actually handles all matters innovation. So in Kenya, we are very fortunate that our Insurance Act actually provides within its mandate the need to actually develop the market as well as to promote innovation. So we are very fortunate, and we know that this is not common across all jurisdictions. And most jurisdictions actually talk about just regulation and the supervision, so we are very fortunate. We have managed in Kenya, in partnership with the FSD, who are here today, to actually roll out a number of initiatives. The first and foremost initiative that we have had in the last 2 years is the Innovation Lab, which is a BIMA lab. And we've been able to see a number of innovations coming through that as well. We have also piloted a regulatory sandbox, which is still in early stages. Another approach that we have adopted as the IRA is actually to stimulate innovation through competition. We actually sponsor students from the universities to actually come up with new ideas and Yes, thank you. I think this is common across. It's not unique here in Nigeria alone, so you don't need to be worried about anything. So as I mentioned earlier, we have the Innovation Lab that we've implemented in partnership with FSD Africa, and we also have a regulatory sandbox, which we are piloting. We also have a number of competitions that we are trying to initiate with a number of the universities to actually develop solutions to the challenges that are facing our market. And the last approach which we are trying to do is actually to streamline the approval process for a number of products that are coming through that are fairly innovative. So we do try and guide those specific applicants navigate the regulatory landscape. So I think as an introduction, Bunmi, I think that should suffice.
Yeah,
thank you.
It's interesting to have a dedicated department and for innovation. So let me go to the next person, Mohammed. Do tell us what, innovations.
All right, thank you very much. My name is Mohammed Hafiz. I head the Innovation Hub unit of the National Insurance Commission. Just by way of background, the National Insurance Commission Ghana, before the implementation of this new law, had a number of initiatives around deepening innovation to create space for innovators to play on our market, except that we had limited scale because we didn't have the law to support that. And so what we did in the past was to, for example, allow some partnerships between technical service providers and insurance companies to be able to allow for example, mobile insurance and micro insurance and etc. But in 2021, thankfully, we passed a new Insurance Act, and that act essentially allows for innovators to play on the Ghanaian insurance space. So what we have going to see in Ghana is to allow for innovative licenses to be issued to innovators to play on the Ghanaian insurance space. So we'd have innovative licenses for intermediaries, would have innovative licenses for insurers, and innovative licenses for reinsurers. Another thing we are doing is to actually have regulations to give impetus to the requirements in the law. And that regulation is at the final stage. We are hoping to get that passed by the close of the third quarter. And all of these things are targeted at deepening access to insurance and also to be able to create space for there to be fair customer treatment on our market. And I look at the topic, we are talking about customer-centric and etc., to be able to allow for insurers to provide the kind of experience that would give people confidence about what insurance really is about in Africa. And so these are some of the key things that the regulator in Ghana is doing to deepen access to insurance and to be able to create more space for the growth of the insurance sector in the country. Thank you.
Thank you. So, Mr. Sunday, thank you.
Thank you, Madam Bumi. Protasio Sunday is my name. I head the Department of Research and Market Development at the Insurance Regulatory Authority of Uganda, where innovation sits. I'm glad to be part of this panel. And the people who thought about the theme on catalyzing innovation. I think the selection has been very good because it speaks to the need for the regulators actually, beyond regulation and supervision, but also catalyze innovation. Our regulatory framework is not very different from my colleague from Kenya, what he mentioned. We also have a dual mandate by law that is to supervise and regulate, but also to develop the market. To answer the question straight, what has IRA Uganda done in as far as catalyzing innovation is concerned? We have been working together with our development partners. We have financial sector deepening Uganda. And actually we engaged in the discussion on innovation. The first ever discussion was held around 2015. And I can see some of my friends here from Senfree. We've walked a long journey. One of the things we did was to provide a framework or a platform for communication. Because we realized that there are so many people who have ideas out there. Some of them are actually crazy, very disruptive. But the insurers this side also have got their problems in the house. And they are lamenting on these same problems of low insurance penetration, lack of trust, issues of distribution. And we became very deliberate and said, let's bring these people together in the same house in form of an innovation conference where the insurers can lament in a closed door, and these young people can listen. We allow these young people to go back, come up with ideas targeted towards solving the problems of insurers. Then the other thing that came up was, now that we have heard and we have developed these ideas, can you give us space to develop these ideas into more practical solutions? And as such, the IRA Uganda came up with the insurance sandbox guidelines. And I'm glad to share with you that in our sandbox, as I talk, we have 2 companies which are piloting very, very innovative ideas. I think one is in its 6th month. We see prospects of it being rolled out in the market within the next 6 months. That solution basically tries to bridge the gap between the insurers and the people at the lower pyramid. The we have motorcycle cyclists, we have village savings and loan associations, we have SACCOs, and we want to bridge this gap so that these people can find it very easy to access solutions that speak to their problems. So we have that platform, which is 6 months. But we also have another platform, which is in the sandbox. It's called Inshuayo. Inshuayo in Uganda means your insurance. Your insurance. And we have encouraged these innovators to come up with solutions that speak to the locals, as opposed to everything insurance being English. So they are trying also to customize it so that even my mother down in the village, the person who has 1 acre of farm down in the village can also now associate with insurance. This one they are doing via a mobile phone, just using a USSD code, giving a lot of information, and policies are being now issued on phone, claims are being paid on phone. We have people buying insurance without ever interfacing with an insurance agent or an insurance company. The other thing which we have done as a regulator is we have incentivized innovation in the market. 2 years now, we have been running what we call the Insurance Awards Innovation, the Insurance Innovation Awards, fully funded by the Insurance Regulatory Authority of Uganda, where we call on proposals from different players, the life, the non-life, the brokers, the bank assurance agents, and all the other categories. We issue a criteria of what constitutes an innovative product, institute a consultancy team as tier 1, institute another consultant team of judges as tier 2 to ensure that the process of selecting the best or the most innovative player is transparent. And in 2 years now, the process has not been challenged. And we see this creating excitement in the market. Our take on this is actually that innovation, if left to the market alone, may not happen. We need to catalyze it. We need to incentivize the players. We come from markets where the laws governing copyrights are not very strong. I innovate today, somebody takes it on for free, meaning that innovation is more or less a public good, and somebody probably who has no specific interest in making profits needs to incentivize these people to innovate. That's it for now in terms of what Uganda is doing.
Thank you, well done. And so, Biodun, my brother from Nigeria.
Yes. Thank you very much, man. And since we are all Africans, we have the same challenges, and the initiatives all look alike. As it's been said already, we also piloting a regulatory sandbox. We just came up with guidelines for web aggregators. We have guidelines for TACAFU and microinsurance so that we can reach the underserved. And so you can see that all these initiatives really cut across the continent. But what we're trying to do, in addition to that is that there cannot be good innovation without data. So as a regulator, we put a process in place to have data about every insurance in the country. And via APIs, we are having a discussion with sister government agencies to integrate our data with their databases via APIs, so that we can have access to a broad-based data for innovators to access, to be able to take decision for what they want to innovate on. So apart from everything they've said, this is what we are doing in addition, having data available for innovators to work on. Thank you.
Okay. Thank you very much for that introduction and sharing the innovations that have been done so far. As I mentioned, one of my key interests is the bottom of the pyramid. So why do you think that insurance hasn't penetrated as, maybe I would say, okay, for instance, like mobile phones? You know, mobile phone penetration in Nigeria is almost measured at almost 98%. But insurance even came before mobile phones. So, and the reason why I use mobile phones is that most times people will say insurance hasn't penetrated because people are living in poverty, they can't eat 3 square meals, but they still buy a mobile phone. So why aren't they taking out insurance? What do you think is the reason why they haven't taken out insurance? Yet they do face those risks. So, Biodu, do you want to start?
Well, I think because the insurance is not a tangible product, they give us money and we give them a promise back. I'm not sure it works in an African mind like that, to give money and give a promise back, from, especially if the risks have not crystallized. And like you said also, many people have low income, low disposable income, and that is a factor. But personally, I believe the religious factor is higher than everything. We believe God is able to protect. After all, we do sadaqah and pay our tithe, and that serves as a spiritual insurance for us. And I think it cuts across everywhere across the continent. Thank you.
Okay. So that said, what do you think we can do? Because despite some of those points, in other countries, they still carry out insurance. What do you think can be done?
Thank you very much. Just an addition before I answer this question. So I would say that broadly there are 2 major reasons for this challenge. The supply side of it, the kind of products that we have for the market. We need to be able to get insurance to everyone, and that is one of the reasons why, if you want to deepen insurance penetration, you need to be able to create products that can serve the underserved markets. The other side is the demand side of it. What kind of experience do customers get when they purchase an insurance, and so on. And so, for example, in Ghana, motor insurance is compulsory. Unfortunately, what is happening in the market is that you have what we call underpricing or undercutting in Ghana. Yeah. That is what we have. And so a lot of people purchase insurance when it is time for claim. The insurance companies are unable to do that. And so to be able to solve some of these problems, one of the things that we have done is to create the motor insurance database. Now that database is a centralized database that all non-life insurers underwrite on. Their data sits with the regulator. You need to price well. If you price below the minimum rates, the regulator sees and then they sanction you immediately. And that has actually helped to ensure that companies do the right thing. Now it is improving the claim payments. Okay. It is also improving the number of people who have their vehicles insured in Ghana. And those are the kind of things that the regulator can do to be able to ensure that these challenges are resolved. Thank you.
Thank you, Hafiz. I think Hafiz talked about the demand side issues, and I think in addition to that, we have an issue of literacy generally with regard to financial issues as well as specifically insurance. So as the IRA in Kenya, what we have implemented together with our financial sector regulators is actually to entrench financial literacy courses within the primary level of education. So this is a project that is ongoing to increase the level of awareness at that very young age on the need for financial products and services. So I think that is a key issue that we've identified, that we need to create more awareness and of course in that process increase the level of literacy with regard to insurance.
Yeah.
Thank you.
Thank you.
Okay, thank you very much. For me, my take to the question you raised, Madam Bumi, is from what I learned in my first class of insurance, that insurance is not bought, but insurance is sold. And I think that's why insurance is not bought by the lower pyramid, because it is not sold. And there are reasons why it is not sold, because the costs of reaching those people in our traditional ways is very high. And these people are also, the insurers are looking at making money. So if you are going to sell small volume policies, and yet you are spending so much, then probably that's not a market to go to. And that's why innovation now becomes very important. In the innovation awards which I mentioned in Uganda, one of the considerations is how much premium, out of your total premium, are you generating from the low class pyramid that you have mentioned. In some jurisdictions like India, I'm made to understand that it's in the law that each insurance company must generate some premiums from the villages, which is not our case, but we are trying to incentivize so that they can think about this. But beyond selling, I think as insurers, we need not run away from the issue which I think Elias raised here, the issue of trust. If we cannot trust ourselves here speaking the same language, English, how do we expect those people to trust us? The models we are using to distribute insurance, the insurance agency neckties, going to the local people, speaking a language that they do not understand, the policy is written in foreign language, which they cannot interpret. How are they going to trust us? And what as IRA Uganda we've done is to provide a framework where we can use local people to sell insurance to themselves by providing those local people some basic form of training. We have also come up with requirements where policies must be translated in at least 5 local languages, with a summary at the end of the policy showing the key features, so that as I sell this policy, somebody is aware of what they are going into. There are no massive exclusions as we all know them. Policies as simple as possible. Premiums paid via the phone, claims settled via the phone in a very short period, and we are seeing some traction. We are seeing some premiums coming from this microinsurance segment starting to grow. And it's our view that if we can continue consolidating this, of course this requires massive investments in terms of technology, in terms of frameworks, but we seem to believe that it is the way to go. Trust. My friend talked about awareness. I did some small random survey at office. At office, most people are chartered insurers. And I asked them, how many of you have used your money to buy insurance? I was surprised that the percentage was only 6%. But these are chartered insurers. So even as we talk about awareness, maybe we need to think about the awareness that we need. Because if you are a chartered insurer, what more awareness do you need? Maybe there is another bigger problem that we have to look at to resolve the issues in the house. Thank you.
Thank you for raising that. And I saw some people shifting because I was wondering if we do the survey in the room, how many people have bought insurance. So that really, we should do it on stage. I will put up my hand that we buy insurance. Okay. So that really is an issue. I think that point about trust is really critical. But also one of the key things, I would just sort of try to relate it to microfinance. And you know, you talked about that, the fact that it's very small, so therefore it's more expensive to serve. And that used to be the excuse for banking before, that was why they couldn't go to the bottom of the pyramid. But I will tell you, I've worked 20 years now in microfinance. We have been able to break small loans and make it profitable and sustainable. Now, so how can insurance do that? So that one of the ways, for instance, we were able to sell insurance in my firm, it was to bundle it with the products. You know, I don't see a lot of bundling. When I travel abroad, I go and buy a blender right in the supermarket there. They are adding insurance to it. So you just add a little bit of money, you know. Why haven't we seen a lot of that? Because I think that if you make insurance more spontaneous, that people don't have to think really about it, they start to get to understand it. And that's what I saw happen in microfinance. We bundled it with your loans, and initially they just felt it was an increased expense. But unfortunately, I would say, Balogun market burnt down, and all our clients were able to start their business immediately because they had insurance. And so when people now wanted loan, they kept asking for the insurance. So, and that's at the bottom of the pyramid when we talk about awareness and so on. When they see the benefit, they would take it. So why aren't we spreading that, those kind of products in other areas? So, and I will lead that to, for instance, mobile insurance. We had it in Nigeria, it was stopped. Why? Because that's an example of bundling. Yes, Biodo first.
Okay, ma. I agree that bundling and cross-selling is the way to go. But I think technology can really help us out. We have technologies like blockchain, AI, machine learning that can help us in this way. And one issue is documentation when you want to buy insurance. With technology, we can have instant onboarding. Like in 2 minutes, you have the details of everything you need. How do we get these details? If I have a phone number, I've already registered my details, personal details, already with mobile service providers. It has been linked to the national ID number presently. It has been linked to our passport, national passport. And all this information we need for KYC are already embedded in this database. So if I make my phone number available, there should be an API connection between the insurance people's underwriting software with all this, and it just pulls all the data immediately. So the issue of filling paper and filling for a long time will not be there. That is one. Number two is also, since we're talking about mobile, and almost everybody has a greater percentage, over 80% of Nigerians have a mobile phone. How do we pay for insurance in the country if I'm doing micro insurance? I've already given them my mobile number and they've onboarded me. Now I need to pay for premium. That is where the issue is in the country. And now I'll have to maybe pay by check or do an internet transfer or do a USSD. But the way to go is to say, since I gave my number, my phone could have airtime, and I should use the airtime to be able to pay for my premium. That is not presently happening in the country because of some issues between NCC and CBN and ICOM. And we're still having discussion on the way forward on that. But I know my brothers here in their country, they are already doing that, and they can tell us how it's happening. Thank you.
So thank you. Please do share with us how using airtime for payments on insurance has helped to drive market growth, and what lessons can we in Nigeria learn?
All right, thank you very much. In Ghana, just like I stated earlier on, we have technical service providers. So, for example, the telephony firms, they have partnerships with insurance companies in which they use their medium as the conduit for the sale of insurance. So I, as maybe Vodafone user, I can actually use my airtime for the purposes of buying a life insurance product for myself and for my family. And so these are the kind of things that we need to do. Aside the traditional products that we have and the traditional channels of distribution, we need to be able to create space for these kind of innovations to happen. And that is why when Clifton was talking, he mentioned that they have a sandbox environment in Kenya. we are also doing same, because that would allow a number of innovators who hitherto the law would not allow them to operate, to now find space to operate on our market. It will deepen access to insurance, because a lot of people who would not have the insurance will become very easier to be sold, and insurance persons who would not have products that are very fluid would now have access to those products, because beyond the traditional products, you need to be able to design products that can meet persons, especially in the informal sector, and that would expand the space for everybody.
So maybe just to add on to what Hafiz has said, in Kenya, we do have a very high mobile penetration rate. I think over 90% of the population has access to a mobile phone. And what insurers have actually done is to leverage on the payment systems that are provided by these mobile operators. So you find that if you want to pay your insurance premium, you have the option of doing the direct EFT to the bank, or the check, or the mobile payments through the mobile payment system. So that's something that is being implemented. On the issue of bundling insurance, embedded insurance is not new, and we do have a number of players who have partnered with aggregators to issue actually bundled or embedded insurance. And we in Kenya, we also have a micro-insurance regulation which is now in play that actually imposes lower capital requirements for anyone who would actually want to start issuing such products that are affordable to that segment of the population. Thank you.
Yes. Okay, in terms of the mobile payments, I think one of the concerns in Nigeria is almost like the increase in money supply. I mean, I don't think that retail insurance increases the national money supply, but using airtime as a form of payment then becomes almost as if you're producing money, I think, was one of the concerns that was raised. So how was that addressed in your markets? How come it wasn't seen as, where CBN now is saying no, that's like creating money? Was that not a concern raised in any of your environments, using airtime to pay for insurance?
No, I think in our jurisdiction, it may not necessarily be the airtime that you are using to pay insurance, but you load money onto your mobile device. Yeah. And it is actually the channel that you're using that is the, yes.
Okay, yeah. You want to?
Our model in Uganda is exactly the same as Kenya, but maybe beyond using mobile money as a payment channel for insurance, we have also issued mobile network operations regulations, where actually what you are talking about, I can buy airtime. If I load airtime of 1,000, probably 100 shillings goes to my life insurance policy. Okay. So it is every time I load, or every time I use my phone to send money, there is some small percentage which goes to cover me for a defined period. That is guided by a specialized regulatory framework, which we call MNO regulations, issued under the Insurance Act. And I think that fear of that is creating money has not come up. But I think even if it came up, it is something that would be able to argue. Because if I have bought airtime, there is some money which has been already spent. So I'm just taking part of that money which I have spent on my airtime. I have airtime of 900. 100 has gone for insurance. We are not able to see it as a form of creating new money.
Yeah. Okay. Great. Thank you. So there was the last speaker, I think Nicola, mentioned about foreseeing the future. I actually feel that in insurance, there's a sort of the ability to predict the future is part of what makes a good insurer. So what risks do you see coming up, innovative risk, and how are the regulators thinking about, the new risk? So for instance, COVID came. It almost hit everyone out of the blue, and I don't think there was any COVID insurance. I recall even my bank trying to then update all our legal agreements to now include pandemics. So, but how could an insurance person have predicted those kind of unforeseeable risk? But there will be new risks coming. So, what are you doing to actually be able to predict future risk?
Okay. Before I answer that, I would like to also add that if the front end of our systems are automated and digitalized, and the back end of the systems of insurance companies are not automated and digitalized, we will still run into a lot of problems. And that is why NICOM released an insurance IT guideline for the industry to guide digitalization. And apart from doing that, in NICOM also we started digitalizing and automating all our processes. Looking into the future is virtual, the future is digital. The risks that will be high in the future, as I see it, is cyber risks. Already we have attacks, ransomware, all around the place. So it is a threat, and at the same time it presents an opportunity. And there is a threat of cyber attack, and there's an opportunity for cyber insurance. We in the commission we have started looking at that. In fact, soon there will be a workshop on cyber insurance for insurance industry and IT firms and financial institutions that have a lot of data about how to go about insuring these risks that we foresee in the future. Thank you.
Thank you. Mr. Stanley?
Okay, thank you very much. To add on what my colleague from Nigeria has raised, I have been thinking and telling myself and almost convinced that in future the definition of insurance is likely to change. Because if it does not change, maybe we may have no Okay, I was talking about the future and power was off. That I had mentioned that the future is likely to change. The definition of insurance, the models, we are dealing with a very delicate population, the millennials. They want things done very fast. They want high level of disclosure and things simple. So issues of exclusions and whatever are likely to have no place. So we need to innovate around product design, around delivery mechanisms. And like my friend mentioned here, virtual. I don't know if you have gotten a license for a virtual insurance company at Nigeria. You should be expecting that. We are going to have virtual brokers, virtual insurance companies. I don't know what we shall do when it comes to supervision, on-site supervision, what we shall supervise, virtual supervision. So that is the future I see. And issues of bundling, I think, are going to be inevitable. Issues of payers.
Even though this risk is quite pervasive, it is an emerging risk for many regulators because we do not presently have ESG regulations in our part of the country. So what we need to do as regulators is to be able to allow the space for environmental, social, and governance risks to be part of the risk assessment processes for regulated entities, so that these risks, insurers would be mindful of them, so that they take risks in the hope that these emerging risks do not have effects on their operations and etc. I also like to add that data is very important, and so what we use data now would really be able to help us when we move into the future, because once you have data and you are able to use data appropriately, you'll be able to develop your market in a way that would help in deepening access to insurance.
Thank you.
Thank you. I think all the risks have been captured, including data that Hafiz has talked about. But I think one last risk I can add is on issue of cross-border transactions. Like, for instance, why we have this R3Lab in place is to ensure that we adopt a common approach to resolving some of the risks that are identified. For instance, if we have an insurtech firm that is incorporated in Kenya that wants to move to Ghana or Nigeria, how do we manage that risk in a similar fashion as regulators? So I think that's something that we need to look into, in addition to the data, ESG, and cyber risks as well. Yeah. Thank you.
Thank you so much. That was really thoughtful and insightful. So we'll take questions from the floor. Who has questions? Do we have a mic? Please indicate by raising your hand. So we'll take 2 questions. Or comments, yes, or comments, or feedback, or contribution to the discussion. Yes, lady. Thank you.
Good afternoon, everyone. Standing on the existing protocol, my name is Patience Ubwaja, Chief Customer Officer for Allianz Nigeria. And I want to start by thanking FSD Africa and everyone that's put this program together, as well as NICOM. So mine is more of a comment. You know, during the tea break, I had discussion with Mr. Napian. And for me, I think one of the critical things for us to be able to drive penetration in Nigeria is actually to focus more on collaboration, especially with the telcos or NCC, as it were. And I've been having some side talks as well here, and I know a lot of discussion has been ongoing with regards to that, which I know has been ongoing for a very long time as well. But I think at this critical time, especially driving the mobile insurance parts, we need to fast track that discussion, because that would actually help in driving penetration, especially to the unreached, especially those in the rural areas and co. So I know our regulators are doing a lot as well with regards to that. You know, the web aggregators, guidelines, the microinsurance guidelines, we see all of that, and there are steps in the right direction that we know would actually help us to a very great deal. But I think we need to take it a step further and engage NCC the more, and if possible, bring the legislative arm of the government, and let's see how this can then go down well for us. Thank you.
Thank you. Thank you very much for that comment. Any other? Okay.
Good afternoon, everyone.
Good afternoon.
All protocols observed. My name is Idong Isidbat. I am the head of strategy and enterprise risk management for Royal Exchange General Insurance. I want to quickly make a comment on what our colleague from Kenya said about introducing financial literacy as low as the primary school level. I know it's going to go a long way in addressing the issues of awareness, distrust, and believability of insurance companies. And that also ties with what we were told by Elias earlier on the activities of FSD Africa. And if you look at the slide, the first step is the awareness creation. And maybe with time, we'll need to ask the FSD team what their plan for awareness will be for the Nigerian market. My second question is to the gentleman from Ghana. He mentioned something about innovative licenses. My question is, how do you do it? If I am a tech insure company, and I believe I have developed solutions that will help the industry, do I get the license first, or do you assess my solution before I am granted a license? And this is the challenge. To develop this solution could take a lot of time and resources. And by the time I'm presenting, my regulator says, no, this is not what we want. So that could go a long way in maybe discouraging people who might be interested in the industry. I'll give you an instance. I have an online store, very big, and lots of people key in. And your regulator says, no, come and take license before we allow you sell insurance on your portal. And the guy tells you, look, I don't need you. It's actually your industry that needs me to distribute your product to my huge base of customers. So how do you handle such a challenge? Thank you.
Thank you. There are two people, yes. This gentleman, and then I'll take her to.
Yeah. All right. Thank you so much. My name is Tim Tokwe, and I'm the founder of PayU, one of the insurtech startups at the Bima Lab acceleration program. I just want to touch on what the regulator from Uganda said, and I also want to ask a question. Right. So, the future right is about pay as you go. Why would I buy an annual cover for my car when essentially I fall into an accident when I'm driving on the road? So why can't I buy comprehensive auto insurance when I'm actually driving on the road? Right. So that brings me to my question, which is the regulator out here in Nigeria just brought out the guideline for web aggregator. All of us who are insurtech startups, we've not built a website to compare prices. We've actually built softwares. We've actually built mobile apps. We've actually built engines, right? That is supposed to disrupt the space. Now, we really do not fit into the provisions of the guidelines. So I want to ask, what is the regulator going to look to do to basically be able to put us in that space? And I'm happy that our daddy and our overall boss is right here too. Thank you so much.
All right, thank you.
Yeah. Thank you. Good afternoon, everyone. My name is Comfort Tonyaga. I am the founder and CEO of Izanu Africa, one of the companies on the Bima Lab program. He actually touched on some of the questions I had. And there's something I was looking forward to hearing, especially when you were discussing the risks, which is climate risks. We are all aware that we are affected directly, and I would say directly, by climate risks. And then from birth to death, my question is always that how do you address food security without securing the food that you eat from seed, to table? So what are the regulators doing to ensure that the 80% of the population who provide the food that we eat, are covered, and especially considering the number, when Elias was making his presentation, the cover as at now is 2% in terms of disaster and climate-related risks. We want to see that kind of enabling environment that will allow the insurtech, especially in the agri sector, to play within the context of the smallholder farmers who are the adopters, and as well as the traditional insurance companies in the house. Yeah.
Thank you. Thank you for that question. So yes. Okay.
All right. Thank you very much. So I would address the first question. So in Ghana, we have, like I stated earlier, the new Insurance Act actually allows for the licensing of innovative firms to play as intermediaries, to play as insurance firms. But in fact, because this is novel, we are setting out this in our regulations that would allow for a sandbox environment. So you are given limited space to test the product or the service that you are bringing onto our markets for a period. Now, if the regulator is happy that this service or product that you are bringing onto the Ghanaian markets would not disrupt our markets, but it would deepen insurance access, it would improve upon customer experience and etc., then the regulator would give you the innovative license. But for the clarity, there is criteria for being allowed to operate on that market. You must have a product or a service that would improve insurance. That is the first and foremost thing.
Yeah, and concept stage or market stage? I think his question is about our
yeah, so I'll address that. Now, that is the concept. So now, once the regulator sees that, they allow you to operate on that space. In fact, at the point of operation, you would be, because you are testing, but you would have clients selling your products to, except that it will be on a very limited scale, so that if it degenerates, the regulator can easily control that and etc. So that is how the regulation is being drafted, except that it hasn't been finalized. Like I stated, we want to get that done by the third quarter. Now, on the question of climate risk, I think that is a very pervasive risk. So what in Ghana we are looking at is weather index agriculture. So where insurance companies, so for example, we have the Ghana Agri Insurance Pool. Now this has a number of insurance companies where the regulator incentivizes them to come out with products that can be able to meet the needs of farmers and etc. Because that is where the most important thing is when it comes to climate risks around agriculture and etc. But I think that as regulators, we need to look beyond just the agri sector, because climate risk is pervasive, it cuts across everything. And I think that these discussions, these meetings, is giving everybody the opportunity to learn more, and with the support of the FSD and etc., we can be able to improve that. The second question, I didn't quite get it very clear, because your question was whether or not, why can't somebody just purchase an insurance on a need basis, not on annual basis. We sell, you can actually buy a short-term insurance policy. So if you want to sell, operate your vehicle for just 2 days, you can buy a short-term product and so on. And so that is presently allowed in the Ghanaian insurance space. Thank you.
I think yes.
Okay, I once asked your question while making a presentation to insurance professionals, and they told me robbery. Did you get that, sir? Why should I insure for 1 year when I can insure when I'm going out? I was told robbery. Yeah. You are thinking accident. They are thinking also your car can be stolen. So you can look at that also. That's by the wayside. The guideline release is for web aggregators, and we know web aggregators are just a subset of InsurTech. But we have a relationship with FinTech Nigeria. In fact, FinTech Nigeria has a committee for regulators, of which NICOM is part of it. And we're trying to have an engagement with them for an insurance roadmap for FinTech, InsurTech roadmap for the country. So maybe next week we already have a letter that we soon go to them for them to come and make a presentation. So when we meet at that level, we'll look at all these issues. So if you are not a member of FinTech Nigeria, maybe you should consider looking at that. Look, I think you have a look. Yeah, so you should consider looking at that. Also for index insurance and climate, like I said before, we need data. And that's one of the reasons why, as a regulator, we are trying to connect to the data, integrate our data, or integrate with the database of various government agencies. And one of the ones we are going to do in the future, basically because of agric, is to have discussions with NIMET and having access to their data for we to do all this. Thank you.
Maybe just to tell you what is happening in Uganda in terms of climate-related insurance. Government has come on board to provide a subsidy. We have a national agriculture insurance subsidy provided by government, where the risks are subsidized by about from 30% to 80%, depending on the location. The areas which are highly prone, government subsidy is about 80%, and especially for small scale again. But for medium and large scale, in not so prone areas, the subsidy ranges between 30 to 50%.
Thank you. I'm not sure, sir, you wanted to make a comment? Okay.
Thank you very much. I mean, from all indications, what we have been hearing seems to lean on the supply side. We've been talking of technology, we've been talking of awareness, we've been talking of so many things, which clearly is telling us that the supply side has so much work to do. Again, insurance is knowledge-driven. I haven't heard much about human capital development. I think it's very key if we are talking of innovation, if we are talking of consumer centricity. Knowledge is quite key. And in recognition of this, the Nigerian insurance market is doing so much in building actuarial capacity. Now, the actuarial profession has penetrated every aspect of the financial services sector. And it is compelling by virtue of some of the existing regulations. For example, the IFRS make it compelling for you to engage actuarial services in some of your returns or management. So I think for us, we believe that some of the initiatives that we have commenced or incepted now is going to assist in developing actuarial capacity for our market. We are developing our young ones to pick up the actuarial analyst as a take-off point towards becoming actuaries. I know the Kenya market have done some extensive job in developing actuarial profession in their market. So we have seen ahead of time the place of actuaries in every aspect of insurance transaction, and that was prompted that initiative. But it's also very key for us that the supply side, we have to up our budget on awareness creation. Right now, if you go through some of our books and you look at what we are spending compared to other heads, you will agree with me that it's not going to do it. We need to probably stretch ourselves a bit and increase our budget for our publicity, reaching out to the people. I'm sure for those in the real sector, if you ask what's at the commencement of their operations, what they spend on in getting the public to know what they are doing. Because we must face the fact, the populace, they don't know exactly what our business looks like until something happens or until they experience it. And how are they going to experience it if they don't buy into it? So we need to do that. Of course, when it also comes to issue of claim settlement, which is the greatest access for people to know about us, where we must find every reason to pay claims and less reason not to pay. I think this is going to help for us to reach out to the unreached. I just feel I want to make this comment.
Yeah, thank you very much, sir, for that contribution. Thank you. Thank you very much for that contribution. So to round up, yes, so we don't keep you any longer from lunch. I think we've had a robust conversation. We started off with the present. What are we doing today across the different countries? And we saw that a lot of things have been done. Actually, the sandboxes give opportunity to generate wonderful ideas, and technology also does that. We also then started talking about the weaknesses we see with the present, how do we bridge them? And, human capital development, information going out in insurance so that people become more aware. But the innovative design of our products, building trust, and so on. And then we focus on the future. Where are we going from here? And what we've looked at, climate change is important. I want to link it to being virtual. That if we don't address the issue of climate change and environmental issues, hopefully all of us don't live in a virtual world, but it is good if business does go virtual. Insurance could be redefined, as we talk about it. Even today, banking is redefined. So insurance too should actually look at what's happening in those other sectors. How do we then actually continue to operate and predict the risks that would come? I hope we've had a wonderful session, that you've gained insight from what we've discussed today. Thank you very much for the honor of moderating, and thank you to everyone. Have a good afternoon. Thank you.
Thank you very much, Ms. Bumi Lawson. Thank you very much, all our panelists, Mr. Abiodun Aribike, Sande Protazio, Hafiz Mohammed, and Angela Ama. Please, can you stay behind for a group picture? May I invite, please, can we quickly remove these chairs and the table? I want to invite the CEO, FSD Africa, on stage. Also the Commissioner for Insurance, Mr. O.S. Thomas, and the representative of the Deputy High Commissioner, Mr. Bola. Can we please have you on stage for a group photograph with the panelists? Please, the commissioner, the CEO, you remain behind. Can we have the FSD team, the UK Ed, and the NICOM team for the R3Lab? Can we please have all of the members on stage? The FSD Africa team, the NICOM team, the UK Ed staff present. Can we please have all the team members on stage? Don't mind me, I will join. I'm also a member. We can only shift it, I guess. Thank you very much.
No, we have recognized them. Okay, we'll call, I think we have gone past that. Okay.
Please, may I crave the indulgence of the Commissioner and the CEO FSD to please have a group photograph with the DG NIA, the Director, the DG CIN, and other industry players present, the CIMA, and other insurance regulatory authorities from Africa that are here, please. The CIMA Secretary General, the Director General NIA, the Director General CIN, Ghana. Oh, okay, the representative from Ghana, the CIMA Secretary General, please, any other regulatory authority present? Okay, thank you. Okay, Gambia, and no, Kenya, we have them already, yeah. I think you can come this way. Thank you very much. At this juncture, I believe we have got into the climax of this event. And my job is over. I want to invite Elias to conclude this program with a closing remark. And I believe there is something he has in stock for us. So thank you very much for your cooperation. Thank you very much for coming. Mr. Elias will give us a closing remark. Thank you.
Thank you very much. I hope that we've been able to pay the value of being here today. And mine is just to appreciate the people that have taken time to join us. And before we do that, I just want us to watch a very short video of what we were discussing today, and thereafter I'll kind of give a few remarks. Kindly, the media team.
A significant portion of the population in Africa is underinsured, leaving them exposed to risks and unable to manage and recover from them. But currently, insurance penetration in Africa is below 3%. premiums per capita are 11-fold lower than the world average. This points to significant scope for growth. Changing regulatory mandates, including new requirements to address broader policy challenges such as inclusive economic development, sustainability, climate risk and digitalization, lack of technical capacity, lack of resources.
The purpose of R3Lab
is to encourage and facilitate regulatory interactions between insurance regulators, which will strengthen their methodologies and develop solutions necessary to create an enabling regulatory environment. Increase supervisors and regulators' knowledge and skills on implementation of sound, proportionate, and fit-for-purpose practices across the region. Support actions, initiatives, and build supervisors' technical capacity on innovation and sustainable insurance. Foster networking with peers and more senior supervisors to identify and resolve supervisory issues faced in their ongoing work and address emerging regulatory issues. Build multinational team of experienced leaders in regulatory and supervisory matters. We have already initiated an innovation and regulatory portraits project
to get R3Lab on track.
We are doing a study on 8 SSA countries: Ghana, Nigeria, Kenya, Ethiopia, Malawi, Uganda, Rwanda, and Zimbabwe, to review and assess the state of innovation, take stock of the challenges or barriers to further innovation, tailored innovation promotion action plan recommendations. We are also working on an ESG project to support insurance industry to address and integrate ESG into their key objectives and frameworks. We need to collaborate, cooperate, and interact.
Right. So thank you very much. And I know all of us deserve lunch, right? All of us deserve lunch. And mine is just to also appreciate everybody for taking time, because we couldn't have done this without all of you. We also appreciate our technical team that have worked tirelessly to get this out, the NICOM team for really giving us an opportunity and also working overtime to get this going. The FSD team, I usually call them the A team, for enabling everything to happen, and for all of us really just to get us up to this level. Remember that tomorrow we are having another engagement that will be hosted at the same place starting at 9 a.m. So kindly be with us tomorrow as we look at sustainable insurance and kind of declaring that we will be able to make our continent green and even safe for our future generations. So thank you very much and have the rest of the good day. Thank you very much.